My mission is simple, to make you money. I'm here to level the playing field for all investors. There's always a bull market somewhere, and I promise to help you find it. Mad Money starts now. Hey, I'm Cramer. Welcome to Mad Money. Welcome to Cramerica. Other people want to make friends. I'm just trying to make a little money. My job is not just to entertain, but to educate and teach you. So call me at 1-800-703-CNBC. Tweet me, Jim Cramer. The Bears. Yes, the Bears, they want to have their cheesecake and eat it too. But the facts won't let them. I'm talking about how hedge funds and the pessimistic strategist buddies want things to go horribly. And until last Friday, man, they've been having their way for weeks. Now, though, the situation feels a little different. Dow gaining another 135 points today. S&P climbing 0.52%. Nasdaq jumping 0.58%, working off that oversold condition. At this point, it's hard to fathom how the bearish view actually can regain some credence because it's hard to take them seriously in this kind of tape. Today's typical. We know that there's been widespread concern that whole regimens of supplemental food for your body, Cheesecake Factory, will be crossed off the collective consciousness of the American public by the GLP-1 diabetes/weight loss drugs. That's Ozempic and its obesity twin Wegovy from Novo Nordisk and Mounjaro from Eli Lilly. We didn't really think there could be a big impact so soon. But then Walmart sounded the alarm to Wall Street last week, saying that their volumes are soft, postulating some of it could be drug-related. Eventually, there could be maybe, 15 million people taking these weight loss drugs. People for whom junk food will then mean nothing because this medication eliminates craving. Nor does alcohol mean that much, though. You can still get a buzz, but only if you force it down your throat. The Walmart call scared the heck out of potential buyers of the food and beverage stocks last week, leading to an incredible collapse in a group that was once considered the ultimate safe haven in this stock market. Almost felt like the existential threat, which is not something that food companies have really ever had to deal with. Now, it might not have been so palpable if it weren't for the worst decline in bond prices in my lifetime in a short period of time. Interest rates shot up at a pace so fast, it was actually, your head was spinning. It was so hard to fathom. When I was doing a signing for my wife's mezcal called Fosforo at a terrific ShopRite in Middletown, New Jersey this Saturday, a club member said, Jim, you just don't talk enough about the bonds. So you know what? Let's go there. As long as interest rates are going higher, it is very difficult for the stock market to rally. Why? First, because every stock's going to be rated against what's known as the benchmark 10-year Treasury. You don't want a stock with a 3% yield like so many of the food and beverage stocks if the 10 years give you a 4.65% with no risk as long as you hold it to maturity. There's no money back guarantee in a food stock. As bond yields go higher, they inherently become more attractive versus stocks. No, you won't make as much money in bonds if stocks go higher, which is why I like stocks. But that leads us to the second problem caused by rising interest rates. The odds start to favor the majority of stocks going lower. Sell. Because higher rates are a symptom of things going awry. Too much inflation, too much demand for money. Just too hot an economy in an environment where the Fed wants to cool everything down to prevent inflation from spinning out of control. So bonds aren't just worthy opponents of stocks. Their movements tell us a great deal about the state of the economy itself. The bond market sometimes does get it wrong. It predicted a recession last year and instead we got a boom. But it's still a very powerful indicator that almost everybody around here is certainly going to follow. Now let's consider a third element that matters. In this particular case, we had a breathtaking move where long-term bonds collapsed in price, soared, and yield. The velocity of this decline, that's what really took everybody by surprise. Bonds tend to move at a glacial pace, but this was an avalanche of selling. We don't want rapid moves in bonds. Too much money is lost that way, particularly by the banks. So let's put it all together. The interest rate, the direction, the speed of the rise in bond yields, the collapse in bond prices is what defined the end of September. But for the food and beverage companies, it was a 1-2 punch. The second being the Walmart-inspired wave of fear coming from these new weight loss drugs. Today it all reversed. First, we had Atlanta Fed President Raphael Bostic saying that the current policy on interest rate is enough to get inflation down to 2%, and higher rates aren't necessary, 2% being the target rate. That comes on the heels of yesterday's dovish comments by Philip Jefferson, the vice chair of the Fed's Board of Governors, who suggested a pause in rate hikes. Yesterday, the bond market was closed, Columbus Day, so it didn't have the ability to digest Jefferson's comments. Today, though, bond traders had to factor in comments by both Fed officials, and they sent bond prices screaming higher, to the point where some were starting to wonder if they missed out on a peak in Treasury yields, at least for the 10-year. Bond buyers swarmed in, and we're able to imagine a world where interest rates actually can go lower for the first time in a long time. Some even whispered about a peak in rates. Meanwhile, PepsiCo, one of the worst hit packaged food companies, saw its stock fly up after the company reported a good quarter that threw water on the weight loss drug thesis. There hasn't been any downtick in demand for soda or for Frito-Lay chips. If anything, there's been an acceleration in purchasing to the point where PepsiCo felt comfortable to raise its forecast for next year, something this company almost never does. They don't forecast for next year out. You know what? I think that was a sign, a palpable sign, that Pepsi had had enough of the bogus, bearish narrative and wanted to take control of its own destiny. So you had rates go down. You had some concrete evidence that PepsiCo has little reason to fear the weight loss drugs. CFO Hugh Johnson made it clear that he's been Pepsi through 55 quarters of forecasting and has never missed. That's the kind of track record that makes the short sellers think twice before pressing the bets on Wegovy. Now, what's the truth? Frankly, I think it's just way too early to assess the impact of Wegovy or Mounjaro on pretty much anything. Mounjaro hasn't even been approved for weight loss yet. And that includes whether it's really going to hurt Dexcom for glucose monitoring systems, down 25%, or Conagra down almost 29%, Coca-Cola down 15%. That said, I don't really care for those stocks because with the exception of Conagra, they're too expensive. And I see a lot of tech stocks I really like more. Jeff Marks and I, in preparation for our monthly investing club call at noon tomorrow, will you please join the club? It's going to be great. Kicked around the idea of buying back some of the Procter & Gamble stock we sold much higher for the Travel Trust. That stock's not down as much as the food and beverage plays, but it's still off more than 4% for the year with a 2.6% yield. And they raise the dividend every year, or they try to. They have. But what we think it's been tarred by the same broad brush as the food and drug business, even though, I like the taste of toothpaste, but I'm not eating it. This is a rich stock, too, but I think it's the right thing to buy. Now, I saw a survey today which showed that many companies might offer health insurance that covers these $1,000 a week weight loss diabetes drugs because they lower the number of people at risk of heart attacks and a host of other diseases. If it turns out that there's broad acceptance of these drugs in a short period of time that no one's expecting, I do think the earnings estimates have to come down for the food and beverage stocks because people will eat and drink less. It's a volume issue, okay, because they won't crave and they're a lot less hungry. Always think volumes go down. Remember, it's one thing for interest rates to go higher and quash these stocks along with so many others. It's another thing to put your stock portfolio at risk of an earnings miss, especially when the stock's more expensive than the rest of the market. So, yes, I take it gospel that Walmart's seeing a slight slowdown. No reason to doubt them. But I also take it gospel that PepsiCo's doing fine, at least so far. Bottom line, I don't know how the weight loss drug situation will play out. But I do know bonds are making a stand, which is a good reason to lock in both the 10-year and maybe even grab some shares of PepsiCo, at least at these levels, before they both move too high to be worth grabbing. We're taking calls. We're going to Hunter in South Carolina. Hunter.
Hey, Jim. First off, I want to thank you for having me on the show.
Sure, Hunter. Thank you.
I wanted to see what you thought about AMC. I bought in at AMC right around $8, and I got to be honest with you, Jim. I like the stock, and I wanted to know if you thought this kitty was going to keep roaring through the week.
I mean, AMC's a controversial stock. It's been a real loser. I'm looking at the chart. That's not like I'm looking at the chart. It's like, hey, listen, it's no Mona Lisa. But I will say this, the CEO is an imaginative guy. Maybe they get a couple good movies going, but when it comes to any move up, sell. What can I say? How about we go to Rick in Virginia? Rick.
Hey, Jim. Thanks for everything you do for us.
Thank you for being on the show, Rick. What's going on?
Got a question on AMD. Buy, sell, or hold?
AMD's a buy. It's in our bullpen for the Travel Trust. I was hoping that we would add some in time for our big meeting tomorrow at noon. We did not get the stock in. It's now going up 7 points. I'm starting to feel that maybe we missed our real good window there, but I like AMD. All right, I think there's a good reason to lock in both the 10-year and some shares of PepsiCo at these levels. I actually like PepsiCo more than the 10-year before they move too high to be worth grabbing. On Mad Money tonight, the used car cohort was one of the hottest in the midst of the COVID pandemic, but with demand seemingly cooling, where does a company like CarMax fit in? I'm getting the latest from the CEO in a rare interview. Then yesterday, we covered stocks that had strong financial positions that could handle this interest rate environment. Hey, how about today when we pick a couple of losers and tell you how dangerous they could be? I'll reveal it. And a shark is swimming in the New York Stock Exchange. Don't miss my exclusive with the one and only Damon John hear more about the important work being done for a cause that I celebrate called Black Entrepreneurs Day. So stay with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.